cash equities. Here, we'll start off with an overview of the equity markets. We'll talk about participants, issuers, and investors. We'll map out the trading floor, and we'll talk about the private side versus the public side. Then we'll drill down into specific roles within cash equities, sales research versus sales trading. After that, we'll talk about exchange trading. How do we enter an order into an exchange? We'll talk about opening and closing auctions. How do you get the opening and closing price each day? And then we'll talk about how sales research adds value and how clients compensate investment banks for equity research. And then we'll talk about sales trading and how a sales trader adds value. And part of that comes from trade execution. So we'll talk about order routing and trading venues. And then we'll conclude by talking about order types, qualifiers, and conditional orders. So let's get started. Let's start with an overview of the equity markets. First, we have issuers who go through an IPO to sell their shares to investors. We generally group issuers by sector and look at technology companies with technology companies and healthcare companies with healthcare companies. On the other side, we have a number of investors who are buying and selling these shares. They can be asset managers who run mutual funds, hedge funds, insurance companies, and pension funds, as well as retail brokers. Retail brokers are websites and investment firms where everyday people like you and me access the stock market, a company like E-Trade or Charles Schwab. In the middle, facilitating this fund flow, is the investment bank. The investment bank, through its equity capital markets or ECM team on the left side, works with companies to raise funds from the equity markets. It could be an IPO if it's their first listing on the exchange, and it could be a follow-on transaction if they're revisiting the market and raising more capital. It could also be private placements or convertible bonds called converts. On the right side of the investment bank bubble, we have sales, trading, research, and prime brokerage. They work with investors to buy and sell shares. These investors provide the initial capital that goes to the issuer. The investors don't stop with that initial trade. They'll be continuously buying and selling shares. Although I used to work at an investment bank and think it's the most important part of the entire equity markets, it's worth knowing there are other intermediaries that work with the equity markets, such as the exchange, where the stocks trade on, as well as depository agents and custodians who hold on to the shares for us. Other parties that are part of the process include law firms and auditors that are part of the IPO process and provide ongoing disclosures. We also have on the right regulators such as the SEC for most securities or shares, the CFTC for most derivatives, the Department of Labor for pension funds, and FINRA, which is an industry-owned regulator, and also the administrator of the SIE and Series 7 exams. Let's talk about how a typical equities floor is set up at an investment bank. First, you have the traders. They manage risk and have a P&L book to buy and sell shares. You have a cash trader whose job is to trade block trades and off-exchange trades. You have a Delta One trader trading swaps, index, baskets, and ETFs. We'll talk more about that in our Delta One course for those of you continuing on to that. Then we'll have a flow derivatives trader who trades regular or vanilla options, and we'll talk more about that as well in our options theory course. Finally, we have equity exotics and hybrids trading, which trade complex options, which we'll talk about alongside our structured notes course, which is a key product for an equity exotics desk. Next in green, we have our sales teams. On the cash equity side, we have sales research and sales traders. On the equity derivative side, we have equity derivative sales, structurers, and structured note sales. Most of the salespeople in equities are product aligned. In yellow, we have prime brokerage, which is a key relationship manager for hedge funds, which we'll talk about in our prime brokerage course for those of you continuing on to that. And in orange, we have equity research and corporate access, which are key product partners that the sales research teams work with. Next, we have the team that brings the IPOs and works with issuer clients. The syndicate team sits on the trading floor and is a liaison from the private side ECM teams and investment banking coverage teams, which work with equity issuers for IPOs and follow-on transactions, but they don't sit on the trading floor. The ECM teams and investment banking teams also work with the corporate access teams to schedule conferences and investment meetings with management. Finally, we have other colleagues on the trading floor that are in non-client facing roles, meaning they may not be licensed to take investor orders, including quants, market risk, operations, or middle office, and technology teams, including coders. The Chinese wall is a term for an information barrier, a way to keep material non-public information, called MNPI, from passing from insiders on the private side with public side investors that are trading. Information such as an M&A transaction, a follow-on stock transaction, or a significant investor's secondary sale of shares can move markets on stocks. And people that have that information can't share it beyond those on their side of the Chinese wall or trade on it. This is what the Great Wall of China looks like. On Wall Street, the Chinese wall is not that grand. You might see something that looks like the picture below: a frosted glass wall and a door with a key card for people on the private side to sit. On one side of the Chinese wall is the private siders. That side will have significant market-moving, non-public information on M&A, follow-on transactions, and insider investor sales. ECM, investment banking, and M&A, and their equivalents on the debt side, DCM and leverage finance, sit on that side of the Chinese wall. On the other side of the Chinese wall is the public side: sales research, sales traders, trading, and equity research. Most of the trading floor is on the public side, and the private side ECM and bankers usually sit on a different floor. Syndicate, who is a liaison between ECM and sales on IPO transactions, get to sit on the trading floor, but have private side information and are usually in a separate box. In addition, conversations between private side and public side individuals are closely monitored to avoid sharing information, and in particular, conversations between equity research and investment bankers are generally supervised by compliance to avoid the bankers influencing research reports. We've just finished an overview of the equity markets. We discussed key participants such as issuers and investors, mapped out the equities trading floor at an investment bank, and discussed the difference between the private side and the public side. In the next video, we're going to explore the roles in cash equities and the difference between sales research and sales trading. We'll see you in the next video.